All right. So we're getting a question almost every day. When are rates finally going to come down? And the problem is the market isn't giving us a clear answer. I know we talked about this last couple weeks, but now keep in mind, there's things that were going on, right? Mortgage rates really aren't moving. Why they're not moving is the question that we're getting so often. And mortgage rates remain in the near 6% range after touching their highest levels in nearly a year. Inflation just cooled some, yeah, last week, but oil prices and Middle East tensions continue to create uncertainty. And mortgage-backed securities are reacting more to headlines than scheduled economic reports. So my take is very simple. One day inflation looks better. The next day oil jumps and the bond market gives everything back. So the housing market isn't crashing. That's the next thing. We have, these things where, yeah, builder confidence remains near post-recession lows. Builders are offering incentives again, though, right? We're seeing big discounts, interest rates. They're doing a lot of things to try to get buyers in there, and price reductions across the board are becoming more common. A lot of our price reductions, seller credits, buying down the rate for home buyers. We're seeing a lot of this now. Existing home buyers, homeowners, pardon, they remain locked in ultra low mortgage rates. So they're probably not going to have to foreclose if they simply have a low rate that's affordable, right? They're paying rates 2.5%, 3%, right? So inventory, yeah, maybe improving in some markets, but in some markets are not, which completes the whole issue of, or I guess provides a whole issue of supply and demand. We have a limited supply with an increased demand. So really my take is people aren't panicking. They're staying put. So the big opportunity here for anybody this week, as we start this week, is five basic things. The first thing is seller credits. I've written a lot about this in the last week. I'm seeing a lot of favoritism in it. You could get a $20,000 seller credit in some markets. And if you do the math, and I was trying to represent the math of an $800,000 purchase price versus a $20,000 price reduction, or $800,000 purchase price with a $20,000 seller credit. Can't leave that seller credit make more of an impact on your home loan payment than getting a reduction. Also, the seller credit can do temporary buy downs. We've seen these used year in and year out for these last 3 or 4 years, where if the rates today are 6.5, let's just say 2-1 buy down, year one's at 4.5, then year two goes to 5.5, and then it goes back to 6.5. It's a great opportunity if you're looking for that, or a temporary buy down is the other way to do that. And I have a full presentation on this. If you go check out our master classes, I have it recorded in there. But think about negotiation. That's the third point. Buyers are able to negotiate so much with sellers right now. It's incredible, which means right now, if you get to negotiate with a property, let's say days of market's 30, 41, 45 days, there's less competition and you can become more fifth point creative in your financing. I mean, down payment assistance, college fee, right? And this is where having the right lender actually matters. We see VA loans. We closed one in Petaluma, California in 3 days. I'm not kidding. We had to wait for docs to come out because of disclosure guidelines and, of course, maintaining the integrity of that. But 3 days. One in Oakland, 7 days. We see down payment assistance closing in 10 days. Super competitive. So it's an opportunity for VA home buyers, FHA buyers, down payment assistance. Of course, conventional, yes. And we're seeing a lot of non-QM these days, which means your bank statement loans, your profit and loss loans for folks that are self-employed, really, really maximizing their write-offs through their tax returns, not showing much income for one reason or another. Those programs are incredibly popular. DSCR loans, super popular. Buying a property using the income of that property, great investment tool, right? We have non-warrantable condos. Condos are sitting on the market, a lot of them because of things going on. I have a full class actually recorded on this. If you want to check it out, please do. Talks about all the changes we've seen in the last 2 years with condos. But that brings us to the last point, financing. TICs, great opportunity, less autonomy. If you're looking in San Francisco, Los Angeles, San Diego, Oakland, a lot of our major cities here in California, TICs are incredibly popular. And you get a lot of bang for your buck in a great community with less of the bureaucracy of an HOA often. So, what I'm saying, again, we're closing transactions in less than 10 days right now. Realtors are being surprised by fast underwriting. But if there's not a lot of transactions being had, you could get a loan fully approved in some cases in less than 24 hours. Self-employed buyers are qualifying through bank stimulus loans. Investors are becoming active again. We're seeing that with the DSCR loans I mentioned. Buyers are adjusting expectations instead of waiting. So everyone is waiting for someone to go first. Buyers are waiting for rates, sellers are waiting for buyers, builders waiting for demand, Fed waiting for inflation, investors waiting for certainty. Meanwhile, life in the market in most cases are still happening. So nobody knows exactly where rates go next. But buyers who understand financing have more options than they think. Don't let headlines make a decision for you. Make what's right for you and your family the decision, right? Take some time, work through your budget, pray about it. Build a plan based on your goals, not today's news cycle. Any questions? Any help? Want to schedule a call about any of these things? Honestly, just see the link below. Schedule time with me. I'd love to connect with you.